So we're going to be chatting around sanctions today, particularly how they've changed over the past couple of years, what to look out for in the future as well. And I'm joined by two experts in the field, so I'll hand over to Nishanth first of all to introduce himself.
Thank you, Dawn. Good evening, everyone. I was pretty much hoping that it might be a graveyard slot, but it is very hard to match the passion of the previous speaker. But we will try our best before the rings. So, in terms of introduction, I'm Nishanth Narendran. I would like to personally introduce myself as a financial crime fighter, but for work, the professional designation is Head of Risk Management for HSBC. So I have 15 plus years of experience in sanction screening, varied between transaction screening products, transaction screening operations, name screening products, list management, quality assurance, remediation activities, engaging with regulators for regulatory examination / interviews. And I've seen the evolution of the sanction screening from the date when the most commonly used screening tool was Lotus Notes based to the most sophisticated one that is currently being in the market, so being claimed. And I'm a fellow in the International Compliance Association and also a member of the technology group of Global Coalition for Fighting Financial Crime. That's about me.
Thank you, Nishanth. And Denisse.
Hi, everyone. Thank you for staying for the graveyard shift. My name is Denisse Rudich. I am a strategic advisor in financial crime prevention, here representing the Sentry as a senior policy advisor today. I have my hand in many pies and a bit of a portfolio career, including a member of the Digital Asset Task Force with the Global Coalition to Fight Financial Crime. I'm an associate fellow at RUSI, and I'm also a co-founder of a RegTech company looking at product risk assessments in AML and sanctions. So if you have any questions about that, please come and chat to me later. But my passion really is about looking at financial crime and seeing how we can champion global initiatives to make the fight against it more effective. Thank you. And I love tech and data.
Thank you, Denisse. Just a reminder as well to any questions you have for our panellists to be asked via the Slido section found on the Brella app. So that's at the top left. Okay, so I'm going to be posing some questions to you both to get your views on some key questions surrounding sanctions and FinCrime and how we can adapt to that in a changing world. We'll have around 5 to 10 minutes for each question, as per the previous panels. And as mentioned, there'll be an opportunity for Q&A at the end. So without further ado, let's get started. So Denisse, I'm going to come to you in a global context first. So what are the major problems financial institutions face in adhering to sanctions?
Right, so I'm going to be a bit of a Debbie Downer at the moment. I would say, looking at the global context, we're probably going through the largest period of seismic change since the Second World War. We are, everybody knows about the Russian invasion of Ukraine. There's massive instability within the markets, and so we're also seeing the use of sanctions as kind of economic statecraft to fight the war in a way that doesn't involve arms and military units and the like. We're also, seeing the use of words such as alliances, which somebody who studied international relations and military history is always a little bit scary. And we're seeing shortages, oil and gas shortages in agricultural commodities, grains, et cetera. So I do realize that it sounds pretty depressing. And what does this mean for sanctions? Well, all of that is happening in the background. We still live in a world that is interconnected, right? We live in a globalized world where trade is still necessary and still remains, where there are ships that are still floating around the world, delivering their goods, their commodities. And we still need to figure out a way of working together, and financial institutions are kind of in the middle of all of that, especially if they have global operations. So what we're also seeing is kind of in terms of what does this mean for sanctions? So we're seeing that even though during the Trump years, we saw a high volume of new names being added to the sanctions list, We're seeing much more complexity, maybe not as many names, but we're definitely seeing much more complex sanctions that are being brought in. So, you have assets or sanctions freezes against individuals and travel bans against individuals. You have corporate structures that are being sanctioned as well. All of that, we all know about that. Debt instruments and debt and securities are also being targeted, but we also have sanctions that are linked to the price of oil. So what do you do when that happens? We have vessels, we have crypto assets that are being sanctioned. We have open source code that somehow became sanctioned as well. So in terms of the complexity of the sanctions and in terms of the legal knowledge needed to navigate the sanctions is extraordinary. And within all of that, you also have carve-outs. So for example, Bulgaria is a country that has a large dependence on oil and gas out of Russia. They have one pipeline that comes into Bulgaria and they have one oil refinery. So Bulgaria is exempt from the oil and gas sanctions until 2024. But again, how do you tell your system about that? And how do you train your system to look at that? And yes, so this is me setting the scene very sadly this afternoon, but also with a little bit of hope and humanity. I don't know. Thank you.
Thanks, Denisse. And just following on from that, we're seeing packages of sanctions that are pretty new as well, such as human rights packages, and these are just been recently introduced in the last couple of months in the UK. Do you see that to be an evolving trend as well?
Oh, absolutely. So the the GLOMAG sanctions, so Global Magnitsky sanctions that were named after somebody who was unfortunately tortured after discovering a massive fraud in Russia. The UK brought in human rights sanctions about a year ago. Last year, they brought in anti-corruption sanctions. The European Union has brought in human rights sanctions, and the president has advised that she is in support of anti-corruption sanctions, but there are many political actors at play in trying to kind of prevent that moving forward. Australia also has human rights and anti-corruption sanctions in place, as does Canada. So more and more you're seeing the introduction of global Magnitsky style sanctions is what we call in our world. But again, they also come with challenges in themselves. And what you're also seeing is actually increased coordination and collaboration amongst countries. So after the war in Russia, there was the creation of the G7 repo task force, which is on oligarchs, and I forgot what repo actually stands for. But the whole point was to implement coordinated sanctions against benign or belligerent actors, specifically linked to the Russian invasion of Ukraine. So there is kind of, on the one hand, there's kind of more coordination, collaboration. On the other hand, you have situations such as Roman Abramovich sanctioned in the UK and Europe, but not in the US, because he was seen as, because President Zelensky basically asked President Biden not to, so that he could play a role in the negotiation of peace in Ukraine. So how do you manage that in a bank?
Thank you, Denisse. So yeah, over to Nishanth, all those complexities, how do you manage those in the financial institutions?
Well, it's not a pleasure to zoom into that aspect, but I will try into giving some practical issues that we're facing in the screening world especially. So that's where my area of expertise is. So generally in screening world, we would assume that there are a lot of alerts that are causing at, people familiar with screening world will know that level 1, level 2, and level 3 type of assessments, right? So where you're initially focused and planned for resourcing at level 1 and level 2. So the examples like the the conflicting regimes, that the example of Abramovich that Denisse just mentioned, what it actually practically resulted in is something that came out of syllabus, which was Russia, and as a result of that, you get a lot of alerts piled up at the level 3, which you're not capacitized for. So you don't generally organizations, resourcing goes, a lot of level 1, a little of level 2, and a minimum of level 3. So when you get that conflicting regimes and you get a lot of escalations, it is hard for any system to read what the sanctions context is on the transaction, and you definitely require a human eye to take a look and review those transactions. So I am aware that certain organizations have got remediation programs that are running at this point in time to clear those alerts, and with the engagement with the regulator, who perfectly understands that this is new for organizations, which is coupled with the fact that the list updates are unprecedented. So some stats to you here is between 2017 and 2022, the list volume has increased 270%, so which is an uplift from 18.5K main records to closer to 52,000 records, and coupled with that is the 210,000 aliases that goes with it. And this is all the data that gets screened against the massive volumes of client data and transaction volume. I'm not even touching about the UBOs or related parties that come along with that, which is an entirely different beast that organizations collectively find it challenging to meet. To throw into that is the problem of virtual currencies that we currently, it's very topical at this point in time. A lot of us spoke about digital assets and virtual currencies, and organizations, big organizations at this point in time, having a problem of clarity at this time to what to expect from that. So there are targeted risk assessments that are currently put in place to understand to what extent big financial institutions, can cope with the changing trend in the digital currencies. One other element which some of you or many of you might be familiar will be the risk of the de-risking aspect or overzealous compliance as a result of this, because the rules are not clear, and hence it is every country that you operate in come up with their own sanctions list or Russia sanctions list, and they throw it into the equation. As a result, you get a lot of alerts, and most of them are the alerts that needs to be referred to multiple levels for adjudication to happen. So what we find particularly challenging is the tech solutions that many organizations like many banks have at this point in time, the screening solutions. They are all set up like for 10, 15 years ago, right? They're not ready for these kind of what if I can term it as modern challenges of sanctions, to say targeted, and take example for Swift messages. It's good news that Swift is evolving into creating the MX ISO 20022 project to get structured data. But if that was not in place, then I would have given that as an example to say that the messages are not structured enough to get the right level of targeted sanctions to be applied for screening purposes. Throw that equation into the name screening world of things, right? You need to get the list of the UBOs on time. Bring in the recent verdict from the European Court on the UBOs, which sent shockwaves to everybody in compliance to say, okay, what is going to be the future there to get the UBO information? Well, luckily, there are some caveats to that to say that for legal and legal purposes, we could use information, but we know, lawyers are smart, so they can get the information, hard to get by with their hands. Even now, organizations are finding it very hard to get the complete UBO registry. Throw this equation of the EU court into it, it is even more challenging. I think that's enough for the challenges the FIs face for the evening, I believe.
Thank you, Nishanth. Yeah, and just from my perspective, I think there could be more work done between governments and institutions for policy work as well. But we will move on to the next question. So, Nishanth, back to yourself around technology. How can technology be utilised to allow companies to keep them aware of changing and overlapping sanctions requirements?
So I'm aware about the audience here, so I'm not going to talk a lot about what you're already in the various stage of maturity in your organizations, or most of you probably either would be in some stage of technology development or are technology vendors down here. So the need of technology is unquestionable. That's given, right? Or else you're working with a lot of manual work in place, but a lot of paperwork in hand. So nobody needs to be preached about the value of technology here. But the point here is that many of those technologies, how scalable are they is a question, right? So, laboring on my previous point in terms of are they ready, are they equipped to meet the emerging needs? The current ones, yes, we are all aware about. How about emerging ones where nobody knew until 2014 that there could be targeted sanctions? We are all prepared for, comprehensive sanctions, and there comes, a complication to the problem. So, some of the examples that I can mention about technologies that are in place is, intelligent process automations that are currently in place from some organizations where intelligent case managers, right? Things like you feel it as mandatory to have case managers to have data quality check inbuilt into it before the data is used for material processes. It will hard to believe that many organizations don't have that. Right? So they have a case manager that takes data from one place to the other, but as simple as throwing in a capacity to validate the quality of the data before it is processed is becoming mandatory these days. The usage of APIs, I can give you an example of what I'm facing at this point. Everybody would be knowing OFAC publishes their SDN list openly in the website, like with many other regulators publish that in the website. Why does it take 24 hours to get the data into the banks? And why does banks generally take or have policies to say that, we need 48 working hours or 2 working days or 3 working days to get the data into screening? In today's technology world, that is a sin in my view, because you've got data already available in open source. You need to move it from one place to the other. You've got API technology. You need to demand for a real-time availability of data into screening. Now, there will be equations like to say, okay, what about tuning? What about the impact it has? There are answers for all of that. There's a risk-based assessment that could be performed in terms of the solution you can put in place. So usage of API to get the data near real-time in for screening is something that I see as emerging, because few regulators in the markets where I provide services to are already demanding for why it can't be sooner. Right, and it is why I say near real time that data needs to be provided. So that is about the API. There's also, industry is building on utility services, right? And I'm not sure how many of you are aware, because in Cybos, there was a presentation about global sanction screening solution, which is emerging technology. I mean, in my view, it is disruptive technology that is being built, which is entirely different dimension to things, which is, why do you need to do screening in-house when someone can do it, when you can outsource it with reliability, with the required governance in place, and with the support of the regulator? If you could do that, outsource the service to a vendor who can provide it at an industry standard, that is the way forward in my personal view, where then you can focus your resources on a much more higher risk events that you can internally control.
Thank you, Nishanth. And Denisse, your views on that?
So when we had our pre-call, I kind of harped on about the human element of the need, how we still need humans to support the technology, to the point that I was asked to make sure that we, talked about how we do need technology. So my pitch is, I think, and I got this statistic from Nishanth, on a global basis, there's between 20 to 40 billion transactions that are processed every single day by financial institutions. And this is growing at 6% every year. 24% of those, so nearly half of those transactions or cross-border transactions, take more than 24 hours to process. And technology, to me, is a vehicle to increase efficiencies, to make things faster, to make things more effective, and to make things in a way better, right? That's what we hope with when you're using a robot to help you do something. However, I think that there is, Nishanth talked about the need for data to be good data and for data to be clean. Sam, in her earlier amazing presentation, spoke about the need to have processes in place and the need to make sure that whatever you're supplementing supplementing your processes or complementing them, that you know what you're looking for, that you know what you need, and that what needs to be in place is actually in place. So, so I think, one of the biggest challenges or one of the biggest things that need to be in place for technology to work and to be effective is also, again, have good data, have clean data, know what you're doing, Nishanth talked about having level 1, level 2, level 3 alerts, and then further escalation processes. For the final escalation processes, maybe the data is not what should be used, or maybe it is what should be used in terms of making a decision, if it is possible to augment the data and have the right information that you need to be able to make a decision brought together by the technology. I think, and I'm going to share this story. I worked in a financial institution at one point in time where we had somebody who was in charge of doing the sanction screening. And the Forex check was seen as a person escalating to the relationship manager whether it was okay to process the sanctions or the transaction that had been flagged by the sanction system. After about a year, it kind of became apparent that it's a lot more, like every transaction was basically being processed, and we identified that actually he wasn't a sanctions expert. He hadn't been properly trained on what he was doing. And so there was a need to carry out a look-back exercise because basically the check was reaching out to the RM and saying, hey, is it okay? Should I be processing this transaction, yes or no? So this is where, even though we had the best technology system at the time, it was actually the human kind of the human element that unfortunately led to the downfall, which then led to a look-back exercise and a review of God knows how many transactions and a very costly exercise to remediate what had happened. So I think this is where making sure that when you have a system in place, make sure that your people are properly trained, make sure that your processes are clear, make sure that your escalations are clear, that the testing that is being done on the system actually aligns with your risk appetite, aligns with your strategy, aligns with everything that is in place, that you have put in place as a human to help you manage your sanctions risk.
Thank you, Denisse. And I think just expanding on that, looking specifically around data profiling, last year, for instance, when February 24th hit us, we were working absolutely insane hours to deal with the nature of changes and how thick and fast they were coming in. That led to duplication of spikes. If you're downloading multiple different lists, should be looking towards that, more of that data profiling to be able to deduplicate the effort on our operational teams as well. So just to yourself, Nishanth, what obstacles do you see in systems and processes at the moment?
An obstacle that I'm currently facing, at HSBC at this point, when I'm enrolling a global solution or a global platform of a control, I face this challenge about countries with stricter data privacy, right? Things like, we don't want to be in the cloud. Now, right, is it cloud, non-cloud, on-prem? And when there are regulations like that has already come up in Turkey, where they want all of their data to be within the geography, then you're talking about a third dimension to things. So a global cloud solution, a data privacy on-prem solution, and a data restrictive in-country solution. So it boosts up the whole cost of compliance entirely for a single control process. So in any scale that is explained, it would say that it is not an efficient system to run, and ultimately adds up to the whole cost of compliance. So that's one example of obstacle that I'm currently facing. I already touched on the timeliness to get the ultimate beneficiary ownership information. I'm not going to labor that point again. From a data point of view, getting credible secondary source of information is secondary identifier information, is very critical, because then that speeds up your process of adjudication. It helps your automated tools to take that information into account and adjudicate the alerts automatically. So that provisioning of that, sadly to say, even on the regulatory list, is very poor. Some regulators are good. They understand the need to have the secondary identifiers. But if I take some examples of some local regulatory lists in the Middle East, there are only single names that are being provided with no additional information. So they create a lot of noise, and they create a lot of confusion in terms of adjudication, and on a conservative basis, those transactions get held up, so ultimately impacting a client experience. Changing sanctions landscape is already being touched on, and one other point which already touched is the systems that we are currently having in place. They're not. I don't believe they are easy to be upgraded. And it is kind of a relationship that Samantha was just saying about, that you get into the relationship, but there is something that happens at the last stage, which is that you cannot get out of it. Now, once you get in, you need a better and a stronger business case to come out of it, because it is talking about all of your past alerts that has been created, all of the alerts that has been adjudicated, and all of that is stored, and that takes a lot of pressure and decision making in the senior management to say, okay, fine, we are done with it, or we want to come out of the solution. So it is kind of you're tied in that marriage for some time, you like it or not, but then you have to work with those technology providers to better the control overall.
Thank you, Nishanth. And I think just from a screening perspective as well, we should be moving away from black box solutions and looking more into fully customizable configurations to suit each company's needs. When looking at systems, I feel that's been a bit of an obstacle that's had to be overcome in the past, where there's set settings, and we want to move away to be able to create a bespoke package based on our needs for whatever you're screening, whether that be payment or name screening or assets or whatnot. Again, after screening, I think secondary screening AI has become a really big topic, and looking at models and how we can train them and continuously look feedback into those as well, so that they're continuing to learn and know how your business works and how your analysts are making decisions as well.
Sorry, if I can add, on the system upgrades, the ambition that I said to the vendors when I speak to them is it possible for me to upgrade my system as simple as I upgrade the software in my iPhone? And they do a lot when they do that, because it's not a similar scale. But why not put that ambitious statement out there and tell them, right, this is where we would want to go to. And as a result, we don't want to spend 2-year or multi-year project in upgrading systems to match or meet the emerging sanctions landscape, where we would want it to be a matter of weeks, if not days.
Yeah, thank you, Nishanth. I think we will move on now to the juicy topic and headache that is digital assets and evasion and how we can tackle those as companies. So, Denisse, I'll come to yourself first from a regulatory perspective. How do you see us taking action to stop criminals using digital assets to evade sanctions?
I like how you introduced digital assets, the headache that is the digital asset world. So I think they're okay. I'm not going to say what we practice. I'm going to say maybe stop de-risking might be one of the first potential areas. Be organic. Maybe understand the risk that a virtual asset service provider presents. And in terms of really truly understanding the risk, are they using your organization for paying, gas, electricity, employees, et cetera, or are they setting up Omni accounts or things like that? So that might be the, and I know that that's not what we talked about earlier. So that might be the one potential thing that needs to happen. And I get that to get to that point, there needs to be more collaboration, more co-creation, more kind of getting an understanding of what are the actual sanctions risks? What are some of the key challenges from a sanctions perspective that are faced by digital asset service providers? And then for digital asset service providers to understand, what are the obligations? What are the ways in which financial institutions actually manage the sanctions risks? And actually, there could be a bit more of a cross-learning between the industries if they work together a little bit more closely. And again, having been at many a roundtable where you have financial institutions on one side and the virtual asset services community on the other side, it still can tend to be a bit of a challenging discussion, at times heated, at times not. Again, sometimes there's a common level of understanding. But there is still, in the digital asset space, I think there's still a problem. There's a bit of a technology problem, and there's still a little bit of a regulatory challenge. And when I talk about the technology problem, in traditional banking, we have SWIFT, whereby you're able to include the name of the originator, the name of the beneficiary, address, unique account number, et cetera. You have those fields available in SWIFT, and it's for the most part used by the majority of the global banking community, which is, why taking Russia off SWIFT was such a big kind of impactful, or seen as a big impactful move. In the digital asset space, you currently do have different groupings of providers and solution developers there have been some solutions that have been developed to allow them to comply with the travel rule. So the travel rule was brought in by the Financial Action Task Force to effectively require originator and beneficiary information, similar to wire transfer payments in traditional finance, to be shared to make it easier to screen and to comply with terrorist financing requirements. So basically screen sanctions so that they can identify potential terrorists. So again, there are some solutions. There are some places that are starting to use some of those solutions, but it isn't done on a global basis. And given the global nature of digital assets, I think that's something that still needs to be worked through, and you know, it is being worked through by the industry. There's a lot of resources that are being thrown at this. There's also the regulatory problem that I'm talking about, is that there is a distinct lack of harmonization in terms of how, even in the anti-money laundering space, or specifically in the anti-money laundering space, how anti-money laundering standards are applied by different countries across the world. So again, even just looking at the travel rule, as of March of last year, only 29 countries out of the 98 countries that are members of the Financial Action Task Force had actually introduced legislation making it a legal requirement to have the travel rule in place. Again, from a compliance perspective, a little bit challenging because the technology wasn't quite there at that time. So I think there needs to be more work done in terms of harmonization of global standards, or not global standards, harmonization in the way that global standards are implemented on a domestic level. I think there needs to be more collaboration and kind of knowledge sharing between traditional financial institutions and the crypto asset space. I do think de-risking does need to be addressed. In addition to the work that I do, I'm also an expert with the Council of Europe. And last year they did this kind of fantastic piece of work where they brought together financial institutions to try to address, basically to address de-risking in the crypto asset industry. And there was kind of a big knowledge sharing session around that, which was fantastic. So I think that is my answer for now. I think more open communication, more understanding of what the risks are, more understanding of the challenges, instead of kind of crypto assets are challenging, therefore maybe we shouldn't deal with them. And I understand that when there's a transition from crypto to fiat and fiat to crypto, you know, there might still need to be kind of a greater bridge of understanding built between the two.
And Nishanth, how do you think you receive that from a company perspective, and what action do you think companies need to take to deal with this sort of emerging situation?
From a financial institution perspective, this question was a tutorial for me, to be honest, because we still, as I said, there is an air of ambiguity at this point in time, and especially when it comes to my area of expertise, which is sanction screening, we're still trying to understand how this would entirely relate to sanction screening, because there are best practice guidelines that OFAC had published in October 2021 that talks about the best practices that firms in the virtual currency field needs to adhere to. But how it comes, the clarity will be achieved when we have got idea about when the virtual currencies or the digital currencies transform into a fiat currency, and at that point in time, do we have that data presented in the payment messages, right? And because at this point, the only exposure that I personally have is when OFAC is listing the virtual currency addresses of certain virtual currency firms or cryptocurrency firms in their list. Those lists are being added in for screening, and they are screened against the traditional SWIFT messages, where if they happen to be appearing as part of the additional information, then yes, we stop and we escalate them. But the actual conversion of the virtual currency or the cryptocurrency into a fiat currency, that needs to be still ironed out in terms of what stage in the process. As you said, since there is no SWIFT equivalent currently, but at some point in time, we can say that blockchain technology that brings in with the element of no anonymity, right, which is the single most important point of debate from a cryptocurrency point of view, in terms of against the financial crime fighters, which is, we are not against virtual currencies, we're not against cryptocurrencies, but the problem is you're making it anonymous. That is a problem, right? So we embrace the technology, but if you're making it open, if the originator and beneficiary information, as per the FATF wire transfer regulation guidelines, if that guidelines could be leveraged and extended to virtual currencies, it is a welcome change, right? Nobody is against the technology. But generally, my answer, if not for the tutorial that I received by trying to find the answer for this question, would be an indication towards the best practice guidelines that are published, which is organizations to start with need to have a management commitment towards understanding what virtual currency opportunities are and how virtual currencies needs to be controlled and regulated, and adherence to that control by introducing the right controls. So I see that largely firms do have that management commitment, and which is followed by risk assessments, which some organizations, mine included, is currently embarking into a targeted risk assessment. I know other organizations have already started their work on digital assets and currencies, which will then lead to embedding or introduction of the internal controls. Some of the internal controls that traditionally we know is transaction screening, transaction monitoring, and with the virtual currency in place, you also have the geolocation tools that are in place, and there's a lot of jargons that can be put in, like IP address, Wi-Fi triangulation. All of that you can find that in technical terms that is available out there. They're all tools available by providers, and it is embedding of those tools and technologies will come when internal controls are embedded, leading to testing and auditing by the firms, and then having a training program in place. So this is a hearsay that I heard in another conference where someone said, your strategy on the digital assets needs to be crawl, walk, run. Now you can't achieve, like if you look back, the current strategy on traditional transaction banking has been that. We did not run immediately. So it's probably the same evolution that will occur in the DAC world as well.
And can I just maybe add, there are a lot of blockchain monitoring solutions out there as well that kind of help assess the risk and potential sanctions exposure of a transaction or a value transfer or a digital exchange as well. So those are kind of solutions that also should be looked at in terms of to be able to help manage sanctions risks from a financial institution perspective.
Lots of food for thought there. And we are running out of time, and there's some good questions come in that I'd like to ask you. So finally, just in one sort of snapshot sentence, how can your 2023 strategy tackle some of these challenges? What is your key focus for this year?
Do you want to go first?
I think we're going to have the same answer, so you can go.
Okay. Right. So my strategy is, for next year is, the point that I already made, which is to make technology flexible, adaptable, and scalable. Right. So you build something internal, you buy something. I'm in favor of buying something that is already built. Right. So just to put the records right. So why spend billions of money if something is already available in the market, right? But even if you do that, right, do it with scalability in mind, and the adaptability. So it's the road to concept to product to launch, right, has to be short. You cannot have a multi-year program running to it, because then you miss the bus. Your regulations change, your industry changes. There's something new that's coming up in the market, and then you're always playing the catch-up game. So any technology that you adopt in 2023 or you launch into it, see what is already available in the market, and right, instead of building something new, see that's scalable. And if you have got a matured, established control in the market, do not feel that you are there yet, because there could be still elements of other controls that you could improve in your system. So I continuously have a discussion with vendors in the market to see what element of an additional control that a new system in the market has that I can build in the system internally. So to have that regular dialogue, with the emerging technology in the market is very key, which is what I look forward to do in 2023, and build those controls in the system.
Excellent. And yourself, Denisse?
I would say maybe just to add to that, do your horizon planning. So again, there are many hotspots in the world at the moment that are still kind of, a little bit challenging. Myanmar, North Korea, Iran, some of the traditional ones, but there's, we recently heard of South Africa doing military exercises with Russia and China. So start looking, be aware, look at threat intelligence as well, and just kind of try to stay on top of potential trends and geopolitical events that might hit your systems at some point in time to kind of deal with that 24-hour to 48-hour implementation time.
Yeah, and I think from a systems perspective as well, it's all about improving risk while improving customer journeys as well as trying to improve the operational load, looking at solutions that can deliver all three of those. So that's going to be a big thing for 2023 in the screening world. So I do have quite a few questions here, and I'm just going to ask one if that's okay. And I think, Denisse, I'm going to ask you, so the question is, what keeps you awake at night in terms of AML or sanctions evasion typologies that the community should pay close attention to in 2023?
The integration of organized crime with warfare, I would say. So the use of trafficking, transshipment networks, I would say, and the integration of some of that being used for arms transfers and the like. I don't know if that makes sense, but yeah. And I'm just glad that data is out there to help us figure out where that is happening.
Yeah, and Nishanth, just a very quick one for yourself. So what lessons from a sanctions perspective as an industry should we have learned, or how can we better prepare ourselves for another situation like Russia so that we can sort of preempt that and be ready to implement changes quickly and effectively?
Well, I might run the risk of sounding like a broken record. I think I made the point already in the sufficiently clear, which is the technology and use of technology. But someone mentioned here before about mock drills to prepare for situation like Russia when things are happening. Now, that is a particular key takeaway for me from today, and I really will encourage my unit to do that in future as well. So that's something. Things are in the news. It does not happen overnight. You see things happening in the newspaper, in the media, and everything. It does not waste any effort in preparing for them using these mock drills of these sessions, because you've got a limited technology in hand, in the scheme of things, and you know how you need to play with it. Scenario plan, and then have those risk assessed and see how ready you are to face those scenarios.
Thank you, Nishanth. That draws a close to our sanctions discussion for today. I hope you enjoyed it, and we'll let you go do some networking now. If you can just join me in thanking the panellists, Denisse and Nishanth, for joining us today.